Good morning, ladies and gentlemen, and welcome to the show on this Monday, the 20th of December, 2021. Thank you for tuning in. Well, you guys have waited for it for a long time for me to say it on here, and I'm saying it right now. I'm generally always a little bit ahead of everybody else. Sometimes not very much ahead, but it started. This is it. Central banks went on a tightening policy. Let's get the chart started right here. Take a look at this. The central banks, they've went on a tightening policy, a tightening spree right now. And they're tightening into weakness. We've already had the first signs in the bond market of an inversion, which always comes before a recession. This is a very, very strong signal of a recession when you get an inversion in the bond market. But that's not all. We've never really recovered from the massive lockdowns that were done originally during the virus first came back a couple of years ago. We've never really fully recovered the economy, and it was running on stimulus, on life support. Now they're withdrawing that life support away at a time of dire need for more support. And I'm going to tell you guys, honestly, we're heading into the front side right now of something that's very dark and ominous. It's begun. Everything's going to start to turn downwards now. And yeah, we might have a few up days, but the lows are going to be lower, and the highs are going to be lower. And we're going to continue to descend into this abyss as far as financial markets are concerned at this point forward until the central banks change monetary policy. So how far do they want to take this? Because this doesn't really have a floor. Well, the floor, I'm not going to say it doesn't have a floor. The floor is down there 80-90% down there. There is a floor down there. But I mean, the system can't withstand what it would take to get to the floor. The system would break apart first. And so, obviously, they're not going to let the system break apart. But right now, they're sitting up there high and mighty, and they're thinking they're doing the right thing, and they're going to bust up inflation, they're going to stop inflation. Yeah, they might succeed at stopping inflation temporarily, a little bit. If they do tighten enough, if the system gets right down to the point where it's ready to stop, that inflation might slow down a little bit, but at what price? Because at a certain point, they're going to have to step back in here, and they're going to have to relent. So this is a game that we're playing right now with the central banks, where how far are they willing to let this go? And what's going to happen to gold and silver? Well, I'll tell you I'll run through the markets real quick here. Let's take a look at the silver price today. It's at 22.27. And you can see it's descending with the markets, but that's not a guarantee that gold and silver are going to descend with everything else. But I believe in the initial stages of this, and I don't really think we're going to get past the initial stages, to tell you the truth. I think the central banks are going to relent, and I think they're going to relent somewhere between, well, I was thinking 20%, that they'd let it go 20% before they relent. Everything drops 20%, in other words, and then they relent, and they come back in and they stimulate, because they've created a crisis. Well, they're going to create a crisis. But now I'm thinking they might let it drop by 30%. They might actually push the envelope to the edge of having the whole system freeze. And in fact, they might actually get there. The system might start to freeze before they finally say, hey, you know what? We've made a policy error. Anyway, that being said, we're looking at a price of 22.27. And I tend to think, though, at a certain point, if they let this go really far and deep, that investors are going to get scared and they're going to run back to gold and silver. At a certain point, investors panic, and they always run back to the main safe haven assets, which is gold and silver, when they actually panic. But at what point will they panic? It's going to be pretty deep into this thing if the Fed lets it go that far. and the other central banks let it go that far. One of the tightest central banks right now is the BOE, the Bank of England. Right now, they're gonna really gonna tighten. They're really gonna turn the screws down hard. The timing in all this, the timing is completely off for all the central banks to do this when we're not fully through with the pandemic, and they're going to come in here and they're going to tighten the screws on everything. Well, it's a no-brainer. A crash. They're going to make a crash. And it hasn't really, the crash part hasn't really started yet. People are thinking, hey, you know, they're still in that mentality, buy the dip. Well, that's going to get crushed pretty darn quick here, because I think we're on the front side of a crash, and we are not going to get out of this until the central banks relent. So this is a game of chicken. Who's gonna? It's like the old thing where kids used to give each other what they call, you know, and they'd have a, and then they'd say uncle. You ever seen the thing say uncle? They say uncle, say uncle. You know, they used to do that when I was a kid. You know, they used to say uncle. Well, that's what the Fed's going to have to do here. They're going to have to say uncle at a certain point, because these markets are not going to stop. These markets would just flatten the entire system because they've been propped up. It's all cheap, easy money. Debt, in other words. And the opposite side of debt is credit. And when you start to pay everything off, in other words, that's what this is going to cause. This is going to cause, at a certain point, it'll cause margin calls and everything else. In other words, and the money's going to start to be extinguished from the system. Yeah. How far are they going to go with this? Well, we're going to wait and see. But I think they're going to relent, and I think that I was thinking 20%. Now I'm thinking maybe they're headstrong enough to let it go down 30%, everything go down 30% before they relent. But they're going to create a crisis, and then they're going to have to relent. See, they're reactionary is the way they are. They never do anything ahead of time. They always do it only after. They only do it when they have the crisis. On this side, they don't see a crisis, but they're going to make a crisis, and then they're going to have to react to the crisis that they created. Here it comes. Anyway, silver's at 22.27. Okay, so we're at the beginning right now, and this is a crisis that's going to start to unfold over the next days and weeks with these markets. 17.96 for gold, down $2. All we're going to see now, you know, is down. Okay, here's cryptocurrency, 21.26. They don't give a hoot about cryptocurrency. But, you know, 21.25, so it's lost $1 billion in the last 5 minutes. But 45,784 for Bitcoin today. What's the Dow doing? It's down a mere 600 points. Now it's 555, so it's bounced back a little bit. Probably going to end the day about 500 points down, and then you're going to probably get a lot of dip buyers tomorrow. It might make its way back up 200 points. But then the next day, it'll go down 300 more. And then this is the sort of thing we're in right now. You know what I mean? Where it's going to start descending until they do something. And this is caused by this tight monetary policy that they're coming in with. You know what they want to try to do? Balance the books? Get rid of the entire Federal Reserve balance. They've created this big, enormous amount of money. They can't. They're not going to be able to do any of this stuff because you have to continue with money creation. This is the way this Ponzi scheme of the system is set up. You have to continue to constantly create new debt. And so, if they stop that process, crash time. And that's what they've done. They've stopped the process now. And just watch it unfold over the next little while. And we're going to wait. What we're waiting for here on this channel is we're watching the central banks, and we're going to see at what point do they panic and come back out and say, hey, you know what, we can't. We got to go back to what we were doing with, we got to support the system. At what point are they going to do that? Because that's going to be the turning point for the markets. And if you can buy in at that point, just before they do that, right now they're not panicking or anything. But they will. Okay, here we are, the Dow down 601 points. Let's take a look now at crude oil, 67.08. It's down 3.78 or 5.33%. The crude oil's showing it. Everything's going to deflate. And it's going to continue to deflate until these central banks change and go back dovish again instead of hawkish. This is going to break them. They're going to have to, how far are they willing to go though before they break? That's what we're watching for here on this channel. How far are the central banks going to let this go until the markets break their back? And then they say, okay, we're going to support it. We're going to support it. We don't want our system to completely collapse. This is a dangerous game being played right now, guys. I can't begin to tell you how dangerous this is. It's ridiculous. Okay, move index today, 72.46. It's starting to tip upwards again. Now we're going to take a look at bonds and rates, and we see a mixed bag. We see some pretty good size movement in the middle of the yield curve. 4.6 basis points on the U.S. 3-year at 0.88. The U.S. 10 years at 1.39 today, and the U.S. 30 years at 1.83. So we're seeing a tendency on the front side of this for U.S. Treasury bond yields to fall, because buyers are running in right now because of fear in the markets. But let me see here. We're going to take a look now at the U.S. dollar index. 96.34 on the U.S. dollar index, and it's actually dropping a little bit today. Okay, thank you guys for listening to my show. Like and subscribe. I think we've just went into the front side of the big one. It's just starting now, and a lot of forecasters out there probably haven't spotted it yet, that this is the big one beginning right now. And it's not going to stop. I don't think it's going to be a sudden sort of thing, but it's going to be everything just sliding down lower and lower until the central banks relent. And if they relent on their monetary policy now at this point in time, can we say hyperinflation if they relent? If they don't relent, can we say deflationary spiral into the abyss? So what do they want? We got a choice here. Do they want the entire economy to go into a deflationary spiral until in the end it just freezes? Or do they want to support the system and move toward hyperinflation? It's up to them. It's not up to us. They're the ones in charge. They're the ones in control. But they've got two really, really, really bad choices here. They can pick the deflation that would just basically rip the system to pieces. Wouldn't be nothing left of our system in the end. Or they can pick the hyperinflation, which is it's a bit slower, but it's still, it kind of messes the system up. Maybe not quite as bad, but it messes the system up too. So there's no middle ground here with this, guys. We're going to move in one of those two directions because the whole system is unstable. It's been set up as a Ponzi scheme, and we're at the end of the Ponzi scheme. There's nowhere left to run. This is basically over now at this point. And if we go the deflationary route, well, we can have the crisis pretty much in the next few months, just before the end of the first quarter, if they continue to to be tight, you know, and the whole thing deflates on them. We can have the crisis almost right away, or we can put it off for a year or two down the road with the hyperinflation sort of thing, and then have a moderated crisis, a crisis that's maybe not quite as bad. But either way, a crisis is coming, either by deflation or by inflation. And you know, this is exactly what 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 the what they said so many years ago. How if we allow a central bank, we're going to have this crisis, and we're going to end up on the curb with no home. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.